Ladies and gentlemen, welcome to the Big Tech Frenzy. In today's video, we are going to be talking about Nvidia, SoFi, and of course, Shift4 today. Now, there's not many people who cover Shift4, so I'm going to do it a little bit of justice here today, as we just saw probably the most exciting insider buys that we've seen in this company in a very, very long time. Now, Jared Isaacman has been known to purchase back this company. The hilarious part about this, okay, Jared's a very rich person. He's been investing in a couple of great startups, and he's ran his own businesses that he's also sold. But Shift4 is the business that he started and created back whenever he was 16 years old. He's still the founder. Well, I mean, you never are not the founder of a business, but he's no longer the CEO. Okay, he's the executive chairman, but he is no longer the CEO. Taylor Lauber has taken over that role as CEO, who has been in the company for a very long time as well. I actually met him. He's very, smart and capable CEO. He's been running the business for a long time at this point. Anyway, Jared, there was a long period of time where people, whenever he stepped down from CEO to become the head of NASA, that people thought, oh, well, there's the brain drain from the company. And now with one of its key titans of the business stepping away, that this means death to Shift4. And the stock actually has not been able to reach new highs since he's left the CEO position. However, he actually ended up not becoming the head of NASA. Trump actually ended up rescinding that nominee, and I think it's Sean Duffy right now is the current interim head of NASA. I could be off on my names there, so I apologize to the current interim head of NASA, but I think it's Sean Duffy. I think. Anyway, what we ended up seeing today completely flips the script, as Jared Isaacman says, hey, I might not be running it, but I have nothing else to do, so I might as well get very invested in this business. This is no small purchase. He ended up purchasing on August 8th, 91,700 shares at $81.90, okay? And then another 104,700 shares at $83.60. He essentially just showed off that he just purchased, in the matter of 2 trading days, a $16.3 million increase in his position. Out of the entire time that Anthony Noto had been purchasing shares in the open market, he also acquired roughly $16 million worth of shares. We were covering that over many year periods between the prices of whenever it fell below $9 a share, all the way down to $4 whenever he was acquiring millions of dollars, and then back up. That was actually right about 16 million as well in total. Jared Isaacman did that in 2 days. Okay, for a company that is also of a very small size, very actually similar to the size that SoFi was back whenever it was that low and Anthony Noto was acquiring shares. It's at $7 billion market cap. Their outstanding shares are falling because they're buying back stock. Okay, their business is growing, and they continue to find key companies that they end up expanding their business towards. So we can talk about what they do for the people who do not follow this business, because obviously it's not a name that I cover very often, because it depends on the news that they end up putting out. But whenever they do, I'm very happy to talk about what Shift4 is. It's probably one of the smallest names that I have in my portfolio, if not the smallest. But yeah, aside from being partnered for many, many years with Shift4, they've also just partnered with Blue Origin to enable cryptocurrency and stablecoin payments for space flights aboard New Shepard. It's a bold new step forward in expanding where and how crypto can be used. Now, Shift4 is not necessarily a crypto play. They've been very early to adopt new technologies, but they are just a traditional payments and point of sale terminal sort of payments play. Right? They are starting to bleed into unified commerce, similar to what maybe a Stripe would do, or maybe a PayPal would also do. But Shift4 is mainly in hospitality. So like a lot of resorts, hotels, stadiums, and restaurants. They're about number 2 in restaurants in America, and they're number 1 in the world for both hospitality and sports and entertainment. So very exciting that the stock, however, it's not been being treated well over the last little bit, especially once Jared left. You can actually see, for the most part, when the nominations actually came in, because the stock price had changed quite a lot, not only with the CEO leaving, but then also some earnings that didn't quite go in their favor. They also announced a large acquisition. So Shift4 has a lot of acquisitions that they end up doing, but they're usually small and very, very small. Usually a lot of them don't bleed over $100 million. This latest acquisition that they did, the acquisition of Global Blue, was over nearly $2 billion. I think it was 1.8 billion after everything, but I could be off on those numbers. Anyway, that, along with mixed earnings and an investor day that people did not quite like, and then Trump's Liberation Day after this, had sent the stock soaring down. Then we saw earnings again, sent it soaring down. But in my mind, the earnings were not upsetting at all. And in fact, they actually put up the exact playbook that they've been showing off for quite some time, and they're doing very well. So I continue to hold this stock, although we've seen mixed results over the last year, only up 6% year to date, 16% year to date. The stock is up 4.8% in the after hours. So people are very excited that Jared Isaacman's buying back in, and we've headed higher since then. But we'll have to see how that ends up playing out. Overall, the amount of gross payment volume that they end up showing off each and every quarter is at brand new highs. They just passed $50 billion in payments, and expanding from one country where they've grown, 85+% of all of that growth, maybe even 90+% in North America. Now they are in 75 countries just over the last 18 months or so after their acquisition of Finaro. So this is a very exciting time for a Shift4 investor, where the market seems to be, selling off this entire stock. They don't like the narrative, the fact that the CEO is potentially leaving. He's made comments that he wants to do other things, and that he's going to stay active. And he's also made comments that payments is kind of boring, which potentially it is. But then with his actual purchases, he's paying a lot of money to buy back the stock. $16 million is not chump change. This is a very, very exciting purchase. By the way, he also commented on an X post whenever the first purchase went out to say that he believes that this is just a large undue sell-off right now. I don't think this sell-off was due to the CFO transition. Nancy is awesome. She left the board to become the CEO on a 3-year contract and is now returning to the board on that timeline. Chris Cruz, who has been involved since 2016, has left the audit committee of the board and joining now the CFO position. You don't leave the audit committee of the board to go to the CFO if there's a problem. You don't leave the CFO role to rejoin the board if there's a problem. Okay? Most of fintech traded off this quarter. I just think that there was a lot of moving pieces with the financing of Global Blue transaction, which threw off the share count. And only one or two analysts caught that. So consensus estimates going into the print were off. Then people just had no idea what to expect from the pro forma Shift4 and Global Blue together. Okay. Typically with Shift4, people shoot first and pick up the pieces later. Fundamentally, the growth is real. No one would deny we are number one in the world in hospitality payments, number one in sports and entertainment, number two in restaurants, and really advantaged with $1 trillion plus payment cross-sell opportunity. Leverage is low. Free cash flow generation is real. Organic growth is above almost any peer. And combined with our capital allocation strategy, we grow faster than anyone else. That's a very, very interesting comment from the founder of the company since he was, 16 years old. I'm a big believer in Shift4. I mean, it's a $7+ billion company at one point. Whenever I was holding it, we were holding above, I think, $12 billion at one point. And, this is a 16-year-old kid who started this business had no external funding. The company's success had to further, the actual growth of the business. They were self-funding for, the first 20 years of the business practically. And then whenever they ended up going public, they had no real relationships with any investment banks because they never asked for capital. And so it's always just been a disconnect between investment banks, analysts, and what Jared Isaacman and team is doing. They are truly a bootstrapped business. And so to find yourself early 40s of age with multiple successful exits, while running a business that has continued to compound at 30, 40, 50 plus rates at different times of the business, is just the type of, founder and market position and total addressable market that I have to bet on. Okay. Especially whenever you see things like this, where he's doubling down on the same company that he's been running since he was a kid, like an actual kid. So I'm continuing to be very bullish on Shift4. This was very exciting to see. I know we have a couple people in the chat who, like MD, who are our staple Shift4 viewers. But this was very exciting. I love the Blue Origin, announcement with the talk of stablecoin payments and everything. So they want to stay on top of that. The part that I think is very exciting is the hardware, right? There's a couple things that are very easy to push out in the world, and that's software. If you can make something online go viral, it's very easy to distribute an app that everyone can download, especially if things are being ran on the cloud. They can be distributed instantaneously. That's why ChatGPT grew so fast. But it is very hard to make hardware of any kind go viral. So the installed base of Shift4 gives them a real advantage over pure play crypto companies, like even the Coinbases of the world that want to get into payments. It's a very different area, but still Shift4 is ingrained. Okay, they're doing $50 billion a year, which is still very small in the grand scheme of payments, but it actually does a lot for them whenever you're talking about, where the next phase of payments is going, whether that's cryptocurrency and stablecoins. They own the largest cryptocurrency charity payments, which is what is it? Giving block giving. Why am I messing up this? The Giving Block. Yeah, okay. Just double checking myself. They also own that company, for which they also expanded their payments there. They're getting outside of just restaurants and hospitality and sports and entertainment, which is also going to be massive areas for them, because a lot of the companies that are running, hospitality, like large resorts and hotels and restaurants as well, are international businesses. So you land a client here in the US, but then they also want you, if you can actually increase conversion, lower costs, and do all of those things, which they can, because most hardware players don't actually do the payment side. They just do the hardware subscriptions. So cross-selling the hardware at a lower cost and really making your money back on the payment side is an unbelievably great business. And I forget where I was going with that. Just on the... I forget where I was going. Oh, that... if you land a customer in North America and you find that you're actually making a successful relationship with them, that they will expand into whatever country that they're in. And they keep expanding globally. So that's very, very exciting. But before we jump on to other... Can you show a little valuation versus Toast? I mean, I can. Let's see here. So there's a couple things that we need to look at, though, because growth rates over the last little bit have favored Toast. Shift4 used to be a much faster grower in the late part of 2024. And of the last 3 quarters where you've seen a big sell-off, you've seen a decrease in their growth rates. But management has said that this is actually very temporary and that they will accelerate back, and they believe that they can actually beat 30+% compounded annual growth rates over the next 3 years. So things are looking to turn around, but we can still look at a comparison. Maybe we can do PE. Well, I won't be able to do a PEG here, but we can do a PEG ratio later as a comparison. Why can I not get PE? Oh, okay, there it is. Okay, and then let me just drag this on over. Well, actually, PE looks a little bit broken because of Toast, but you can see this here. They've just shot up so much that it actually is hard to see. So if we just look at it on a forward PE basis, you can see that Shift4 is trading at roughly a 14x, which is just incredible. People are taking this payments company that is extremely fast growing. Let's also add in PayPal, which should be lower than both of them, but it should be much lower than Shift4. And what are they trading at here? It's just behind my camera. Yeah, PayPal is trading at 12.5 times, and Shift4 is trading at 14 times. Toast is trading at 41.8 times. And now this is the biggest player in restaurants, but they haven't really expanded out into other areas. Now, the funny thing about Toast is that they actually make a lot of money right now because they charge so much for their services. Their software is more expensive. Their hardware costs a ton. But it is an amazing piece of technology. Their tech is amazing. Shift4, I would put them at good, not great on the software side. Don't let Jared or the team hear that. But from what I hear from customer success stories is that Toast is a very awesome platform and Shift4 is good. But the cost difference makes it so then Shift4 is a much better approach for a lot of these companies that end up choosing Shift4 over Toast, because the cost comparison is like nothing, like not even comparable. Essentially, I think a 5-year contract for Toast costs something along the lines like, if you have a moderate restaurant chain, that it's somewhere around $90,000 over a 5-year period, and Shift4 is somewhere around $28,000 or something like this. Like the difference in cost is quite substantial. But yeah. So once you see it on a PEG ratio, though, it changes everything, because the growth rate expectations for Shift4 are accelerating going forward, and Toast is still very high. I can't take too much away from Toast. Obviously, they're growing and they're doing very well, but it also comes with quite the valuation. But if this is also what makes it hard for me to want to acquire like a PayPal, for example, is you compare a PayPal's valuation to Shift4's and you're like, wow, man, Shift4 looks cheap. They're growing. They're free cash flow positive. They're doing buybacks. They're doing everything right. So yeah, that's just how I judge some of these companies together. So you can see here, I have most of my charts set up. Bear with me. Shift4 is continuing to grow, and these are not like stagnating. Like no one's talking about death around, like death of the business around Shift4. No one is suggesting that. But it's just a matter of how fast people think they'll grow. The other bear case is how much of their growth is organic growth versus non-organic growth, meaning are they acquiring to make sure that their numbers go higher? But as you can see from Jared Isaacsman's post, is that they don't even think that that's true either. But yeah, essentially you're going from Q2 of 2022 of $16 billion. Oh, and by the way, if we expand this just to show you, from Q1 of 2020 up to now, like look at the growth over the past 5 years. From in Q2 of 2020, $4 billion of payment volume. Oh, sorry, this is too small for you guys. There we go. From Q2 of 2020, where we saw $4 billion, or even Q1, there's a little bit of sell-off because that was really the main quarter of COVID, to now, more than 10xing those rates, up to 50 billion. this company is growing dramatically. Okay. And the acquisition of Global Blue, they have a lot of success on, but it's a little bit different of a strategy. Essentially, they've taken a really big bet that whenever they do a lot of their other hardware companies, like Global Blue is a mix of a payments company, a consumer company, a luxury brands merchant acquisition. So it's a big mix, but it's also a big company. So once that's fully integrated with their company, we should start seeing some of that success, but we don't know if that's going to happen even in this year particularly. Another thing that I like about Shift4 is they have growth, but the growth is extremely conservative in the way that they manage the cost of that growth. Just in the last quarter, we did the lowest rate that they've seen since being a public company at 1.6% of 1.6% of revenue was stock-based compensation. You know, SoFi's has been lowering a lot, but it's down to like 7.7%. You know, there's all of these businesses that are growing very well, but they don't have nearly this level of discipline on the way that they grow. They're doing buybacks as well. They're free cash flow positive. And the guidance is also looking very good. And guidance went up quarter over quarter. Or sorry, sequentially, they increased guidance by roughly about $300 million. So that pushes revenue less net income fees even higher. 47% is the revenue less net income fee expected growth rate. We'll see. We will see. Margins are doing well. It's a pretty interesting business for a very cheap rate, mind you. But there's a lot of changing pieces, or a lot of changing pieces, shifting macro in payments. So people get a little bit worried of these types of companies, but that can lead to a lot of alpha if you're willing to take a bet on a payments company that you think is going to continue to grow, is staying forward looking, acquiring not only large customers, but also big name customers like Blue Origin, SpaceX, stuff like this. 1 second. Okay. Let's see. SoFi also showed a lot of strength today. I know it worked well with the video I launched. I posted a video and said, hey, you know what? I think that this company is going higher. And then it went higher today. That was a nice feeling. By the way, Shift4 now up 5% in the after hours. So hopefully that closes up quite high tomorrow. SoFi, well, actually saw a lot more strength and then came back down. We were up above $23 per share, but now it started to, or ended up closing at $22.42 and staying flat in the after hours right now. Let's talk about SoFi really quickly because there were some interesting things that we ended up seeing. I also want to talk about just the level of growth that I'm expecting for SoFi, or maybe I'll make a video on it. I'm not sure. But I think that they're going into full growth mode and a level of growth that I don't think we've seen from SoFi as a public company. I think that we're going into a growth mode like what we saw in, 2018, 2019, and very, very excited. Very excited about that. Anyway, people have been talking about gaining access to SoFi's new products. There's also been some commentary about new products coming out that people aren't gaining access to and stuff. I don't think that's true. I think they are pushing out products, just not always for the products that people want. There's been a lot of changes in their loan segments, Relay, Cash Optimizer, these sort of things. But SoFi Labs Zone is coming to the SoFi app, says SoFi Insider. And this is pretty interesting. Okay. What I think is really cool is whenever I think of a labs, I always think of Google Labs, which is an experimental, almost beta. You have to sign up to be a tester of these new products. I think that there's a massive amount of people online who would love to try, even if it was a buggy solution, the cash optimizer products, new credit card, products like the SoFi Independence card that was potentially leaked, or level one options, crypto. These things would be very interesting for beta testers to get their hands on. It could also help SoFi deliver products even faster. So if this does come out, I'm sure a lot of the people in the chat here today would love to, get their hands on that. I'm very, very excited about that. There was also from the SoFi Insider, he ended up posting, or whomever it is, posted about level one options being mentioned even more in the app code. They found more actual code in the app that said things like insufficient shares for covering call pop-up, cash needed for sell to open put, option sell more than owned error, stuff like this that are, little pieces of information in the code that might say that they are about to launch this hopefully soon, or they're getting ready to launch it. It's expected by, end of year or some point, but end of year could be tomorrow. It's at some point between now and end of year. I don't think every single thing that they've said, the cash optimizer product out of beta, crypto, level one options, all of these things are going to drop on December 31st. Okay. So it's just a matter of when we get our hands on them. When that does happen, not to reiterate, my video a little bit, but I think that they're going to push heavily into these new products. From what I'm seeing right now, and I'll probably do an update on this, every piece of information that I'm seeing about SoFi is increases in the amount of referrals that they're willing to pay for customers, the bonuses that they're willing to pay for people who cross-sell into other products. They're willing to pay people more for certain loans. They are giving higher APYs for people who sign up for SoFi Plus today. They're giving more people APYs for people that sign up for SoFi at Work APY, like through SoFi Plus, and referral bonuses. It's insane. It's everywhere you look. Okay. They have this new SoFi Plus Fridays thing where they'll spot a drink during happy hour, all this stuff. Like I like, it's just a lot. And I think that's an equivalent of what you would see from a Robinhood that's willing to pay 2% of your total balance, 3% of your total balance to bring over money into that ecosystem. That's what SoFi is trying to do here. Hey, we'll pay you more to come over. That's going to jack up customer acquisition costs. That's going to jack up the sales and marketing expense, but that's going to lead to potentially higher member counts and higher cross-sell and higher average revenue per user if more users are going on to the higher end products like SoFi Plus. Now, there's a slide that I always like showing off, and let me see if I can find it here. But hold on. Uno momento. Oh, sorry. Here. Yes, this one. Okay, perfect. This was from Block's 2022 Investor Day, which has been a while. They've actually announced that they're going to do a new Investor Day in 2025, November. Okay. So Block is hopefully going to give us some nice insights into what they're working on. And they also did talk about how they're getting higher cross-sell to direct deposit users for Block in their latest earnings call. So that's quite interesting for those that are interested in ticker symbol XYZ. But in this old Investor Day presentation, they talked about the different inflows, the amount of money that someone brings over based on the type of product that they end up using. So if you're doing their, peer-to-peer payments solution, you're getting the base level, smallest amount of average inflows, per customer. Once you start adding on stock trading, Cash App Card, their Cash App Tax, or their borrow products, these still do not nearly bring in as much as what a direct deposit user would bring on. Block has also noticed that the amount of money that someone brings on through inflows is a direct relationship to how much average revenue per user they see from those customers, whether it's for peer-to-peer, stock trading, Cash App Card, tax borrow, or direct deposit. The higher inflows they have, the more average revenue per user they have. So I'm just very, very excited for what this means for SoFi if every single post that they end up posting is about new promotions for SoFi Plus. And I mean, guys, it's everyone. It's that or it's home loans. Like they're pushing into all the things with the largest total addressable markets right now. It's no longer small SoFi, being quiet and all of these things. The only thing that they haven't really pushed is credit cards. I still, to this very day, have not seen a post about credit cards. Because maybe they're being very selective in the amount of customers that are willing to take a credit from them or a credit card from them is higher than what they're willing to give out. So they're not going to try that right now. But non-financial products are non-risk-based products are much more easily scaled. They could essentially handle 50 million customers if they wanted. You know, we also saw that from the jobs release, from the amount of new job listings that they had. All of them were in money movement and SoFi Invest and like it just all plays into the SoFi Plus, benefits here. If we take a look, we see, okay, so this is their pinned post. So this is actually their most recent post 5 hours ago. Hey, if you're a SoFi Plus member, get an opportunity to win a once in a lifetime experience. You have to be eligible to apply if you use direct deposit. If you're a SoFi Plus user, we'll give you an additional benefit. Hey, kick off happy hour on us. So Fridays, home ownership. There's additional cash backs. You get even higher bonus rewards, plus 25% off for SoFi Plus users. Okay. Not that. Here's this. Want up to $2,000 in stocks plus premium investing perks? Join SoFi Plus and fund an active invest account. Grab 2x the bonus rewards plus some other things. It's just better together. SoFi Plus. It's constant. It's just everything that they're putting out is about SoFi Plus, and it's very exciting. So I can't wait. And that's not including all the SoFi at work stuff that, SoFi Insider has found and all that information. So I'm gearing up for a very, very explosive second half of 2025. I've not changed my mind on that. I think, and people can say bank all day long and all this stuff. I still see these comments. I still see people saying that, whenever I talk positively about this business, that somehow I'm pumping it. But guys, the information's right in front of our face. Like somehow I'm able to predict to some level of accuracy, which I would say is higher than most, on the amount of new members that they're able to bring on. Every single quarter, they raise their average revenue per user on financial services. So if you can bring on new members to financial services and you're making more money off of them, I don't see how that's nothing but very positive. Now, you could say the stock is pricing that in, but then you just need to take 1 second to look at Wall Street and see, okay, well, what are you expecting from Wall Street on a revenue perspective? And what are you expecting from them on an EPS perspective? And for most companies that I cover, the bullish ones, the growth ones, right, that Wall Street is expecting more than what guidance is outlaid. And yet for a company that triple beats, Wall Street's average analysts still undercut what Wall Street is expecting. Like we can take another look. Maybe it's changed. Maybe they've increased their EPS and revenue, but SoFi just recently said this is before dilution. Okay, so it should be, they said EPS neutral. I think I've done enough work to prove that it's even higher than that. But they said 31 cents of EPS. I think next quarter we're not going to get anything under 32. Or sorry, that's for full year of full year. Sorry. For next year, I don't think we get anything less than 32 cents. Now, let's see what the average here. Yes, the average on Wall Street for full year 2025 is 30 cents. They're lower than what the midpoint of SoFi's guidance is. And then not only that, the high end, dude, the low end, I want to know who said this. The low end for full year 2025 is 26 cents. How's that even possible? Like, aren't we like almost there? That's incredible. 26 cents. The high end is 34. That's more realistic. 26 cents. And then the low end for 2026 is 32 cents. That's funny. SoFi thinks they're going to do 55 to 80 cents. There's someone on Wall Street, I'm sure we could take a guess, that says 32 cents and then 46 cents for 2027. That's the most laughable projection I've ever seen. That's unbelievable. Now, we did end up seeing a tick up just most recently on their guidance, but still, these are small adjustments. Just crazy. Absolutely crazy. Not Devin. No, not a chance. I could actually check Devin's. His, I think, is more bullish than that. By the way, Carl S., thank you, brother. I appreciate the new membership. Welcome. Let's check on Devin Ryan's EPS right now, just because I'm a little bit curious as to what he said. I think it was 33 cents. That's what's in my mind, but I could be wrong. Okay, I'm on the report here. He said full year, this is revenue EPS, they're at 28 cents. Devin Ryan's at 28 cents for full year of 2025. Adjusted EPS. I can share this really quick. I can't share this whole report, but we can look at a little bit of it. And that's Citizens JMP Securities. So, you know, this is Devin's. Sorry, right here. Full year of estimate 2025. And then 52 cents, which is still below Wall Street's estimates. So what's going to happen whenever they blow away that expectation? And then people think I'm crazy because we're at $23 or high 22s, and I think that the stock is going to go higher. It's like the whole market's off. Either I'm off, okay, and SoFi is going to do something they've never done, which would be miss greatly. Every single quarter, it's the easiest company to predict. They triple beat, and then they end up, they double beat and they end up raising, which makes the triple beat. I don't know. Tanner, write a comment in chat. What are you guys talking about? Tanner, I believe SoFi will go higher as well. Okay. Yeah. Well, it's honestly different. The trade desk, so one, you could barely call it a double beat. There's a lot of estimates that actually said that what they actually did was come in line with estimates. SoFi beats the high end of Wall Street's guidances. Okay. There's no macro that's showing that this is looking worse for them, unless you really are a believer in a recession for SoFi, and that you even think that SoFi is going to be largely impacted from that. I don't. I mean, the large consumer that they have is Prime Plus, which are pretty insulated anyway from a large recession. I have such a problem. Like, can we talk about this? Why no one ever talks about the quality of revenue whenever we're comparing fintechs, for example. People look at like Dave and Block and Chime and all of these things. Even Robinhood, to some degree, makes a decent amount of money. Now, Robinhood's pretty is one of the smaller companies here in terms of the companies at fault here. Okay, but Chime, for example, is bragging about how much instant withdrawal fees that they're end up making. Like, guys, I'm telling you right now, in a world of instant payments and stable coins, this will be a product that cannot exist going forward because instant payments will be the only offering. So to take 1% or 1.75% of someone's paycheck just so then you can instantly transfer it into their account versus waiting 3 to 5 days is lunacy. Okay? You're never going to be able to charge that amount in the future. So all of these companies, Dave, Cash App, Venmo, PayPal even, all these payment companies that are just gouging out people's eyes right now for this, style of revenue is a product line that I think is just going to ultimately go away. Just completely. Down to zero. So, SoFi doesn't do it. They are staying away. They're making their money from things that will not get displaced. In a world, you can pick all the stable coins, cryptocurrency. We go to the reserve currency of Bitcoin. You're still going to need loans. They're just going to be denominated in Bitcoin if that's what you believe the future is going to be. Okay? So, yeah. Nobody disagrees. The market disagrees with me. The market does. Because all these companies, and I understand, okay, Chime, has no real risk revenue the way that SoFi does. I get that. But for me, I look at the trend, okay? The amount of, okay, couple of things. I have a couple of things to say here. The amount of fee-based revenue that SoFi is making is not increasing at just in general. It's taking over as the amount of total revenue. It's now at 44%, the highest it's been. That'll continue to grow. How do I know? Because it's growing at 72% year over year, and the amount of revenue that SoFi is actually growing by is 44% year over year as of last quarter. Okay, so I just look over. I just see Tanner's arguing with himself. I am, but for real, it's me versus Wall Street, and me trying to justify my thesis here. But whenever I think about, okay, Chime needs to grow up market and build out a lending platform and try to acquire high-end users and offer them high-end tools. That's going to be hard. That's going to be very hard. Many companies have tried. Okay. SoFi working down market and offering debit cards and instant payments and stuff like this, or potentially going to the Chime audience and saying, hey guys, you guys love instant payments. Chime's charging you 1% or 1.7% in some people's cases. We're not going to charge you at all. We're going to do what Coinbase does to take market share, or what Robinhood does to take market share. Hey guys, we're not charging anything. So in order for Chime to meet that level of customer satisfaction, giving them exactly what they want, would hurt Chime's annual revenue by roughly $300+ million a year. Or potentially, by the time we actually get to that state, probably $500+ million. Okay, that's going to hurt even Robinhood. If Robinhood tries to adjust there, that's about $100+ million industry for them. SoFi, it wouldn't change a thing. They're not growing that way. So to grow at the quality of revenue that SoFi has versus these other fintechs, I think that they have a very, very big advantage knocking on the door of those fintechs and saying, hey, we're coming for your customers. Try to take ours. Good luck. Because they're not leaving. But we're going to come take yours because you're charging them too much for these products that are easy to offer and are cheap as ever. And that's why you have gross margins of 90% because you're gouging. Anywho, But yeah, I am arguing with myself. Buy yourself a hot dog, kiddo. Thank you, Donnie. I appreciate that. So I am a big believer and growing in how I think that SoFi's go-to-market is going to win, because them working down market is going to work very well. They actually just put out this thing. They've done roundups for quite a long time, but they're, I think, probably trying to push it out now as SoFi Investor Found. You can just go to SoFi.com/roundups. And now they actually have a whole page for this. Well, let me tell you that, and we've been talking about this for some time, but you don't work on products that your customers don't want, okay? And usually the higher end people who are making $300,000 a year, $200,000, I think the average SoFi customer, just in general, makes over six figures, but on the lending side, they make over 160,000 on average, okay? I don't think those users care about 12 months rounding up to $300 in a savings account after making, by the way, 50 purchases a month. So, yeah. And it's not 300 free dollars. It's $300 of your money that's just going into a separate account. Now, I don't mind roundups, but what I actually think that is them starting to make products of them working down market. That they realize to get to 50 million users, you're not going to stay above six-figure average customer balances. You know, like the high majority of people don't make six figures. So they're going to tap their market, and then they're going to look for others. And then that's where Chime and the Blocks and the Cash Apps and all of these companies are going to have to face a new competitor. And judge a company on the way that they're in the direction that they're going by focusing on the products that they're working on. If you see a customer or a company make a really, really high-end credit card, they're looking for really high-end users. If you see a company put out a secured card or a debt monitoring tool or like a credit monitoring tool, they're trying to look towards a lower end, credit customer. So maybe buy yourself a pizza. Thank you, Donnie. So yeah, I'm just very, very excited about SoFi. Let's talk about Nvidia really quickly, and then we can do some other conversation after this. After a quick water sip. Stay hydrated. Okay. If you're not getting through like 120 ounces a day, just pure flat water, I don't know what you're doing. That's not health advice. I don't know. Nvidia. First, I'd like to talk about Nvidia's size in the market, which, as you can see, in the S&P 500 now makes up for 8.2% of the total market share of the S&P 500. Now, that's quite large. But did you know that's the largest share any company has ever made up of the S&P 500 ever in history? This is a new record, ladies and gentlemen. The S&P 500 is now dominated by one company, Nvidia. Is it crazy to think that that's going to go even more in their favor? It's been awesome following this company, but can I talk about the extortion that the U.S. government is? And now maybe if I want to go to the States one day, maybe I shouldn't say it's extortion, but there's never been a deal in history that I can think of where a company is not allowed to sell to another country because it's a security threat. Okay. You cannot sell there because the chips that you make are so dang powerful that the tools, the software that China will be able to make with your chips could be dangerous to the security of Americans. Fair. I believe you. But if you give us 15%, we'll let you sell to them. We'll forget our security even was a problem to begin with. Donald Trump said, yeah, these H20s, this is old school. China already has this. This is garbage. Maybe one day we'll do it for the Blackwell, but this is a trash chip. I mean, let's just get it out of here. We'll just take a quick 15. What are you talking about? Anyway, I think the market is happy and just relieved that there's no uncertainty. You can model out the 15%, at least the deal is done. But it is crazy to me to see that, Nvidia even has to pay those prices. It just makes the whole security threat fake to begin with. Doogie Pie says, or it's time to go buy yourself a steak. Thank you, Dookie. I appreciate that. I will do just that. I really will. I'll make sure to take a picture of it next time. Either way, I'm still bullish on Nvidia. I don't think that this in any way necessarily hurts their ability. I mean, the funny thing was that he was talking about taking 50% plus of Blackwell chips and stuff. Like, it just, I don't know, just feels a little bit like a mob to me. And I mean, hey, if you set the rules, you can do what you want. But I just, I don't know if that's what people are agreeing with, and that's what they believe the government is there to do. I don't know. Don't worry, gentlemen. I'm a medium rare. I'm a medium rare guy. I'm getting medium rare. I'm not like Amit gonna get some well done steak. I'll eat a nice proper steak. The new style that I've been getting on lately is a Chicago style medium. Like if I'm feeling real frisky, Chicago style medium porterhouse. Bam. Not bison, just the normal cow. I actually don't care about filet mignon too much. I actually just don't find it has enough. Too soft. Chicago rare. The medium's pretty good. Nice crispy edge. Tanner, write a I have no idea what you guys are talking about. I do like a filet mignon as well, but ribeye is flavorsome. Yeah, we're getting into steak talk. All steak is good steak. Sorry about the vegetarians and the vegans. Beef is what's for dinner. All right. Beef liver pate. I can't say I've had it. YouTube gave a bunch of people numbers in their username. Okay. Oh, I meant to say hi and I typed ho. There you go. Nope, I think I'm fine without my numbers. How about you got me there. No, I'm okay with the steak in Archer. Yeah. I'd rather be a customer than a shareholder, but yeah. I think it's if you've probably set yourself the tag early on that you have no number, because I remember specifically setting my name tag. If you didn't, they probably just have too many users now that they needed some way to differentiate people with same names. I don't know. I'm just completely guessing here. Anyway, this week we have some pretty interesting earnings, ladies and gentlemen. We have CoreWeave and Kava tomorrow after the earnings. Also, tomorrow morning, I was suggesting going public, still thinking about it. We have C Limited, we have Circle, and we have eToro. But I don't even know which one I'd want to listen to. Probably Circle. Guys, can we talk about the community fund really quickly? I think the biggest mistake, which I tried to hint at a little bit by buying SBET, was that we didn't acquire SBET at lower prices. But yeah, it had such an interesting day. We pumped up super high and then fell all the way back down to $22 a share. But I'm actually starting to become quite the Ethereum bull, and not based on the runs of this, but just the way that it's being described. I've been an Ethereum bull for a long time, mainly Solana, but I'm realizing that there is a network effect to these things, and that if institutions feel more comfortable with Ethereum, then that's the way that we're going to go. Okay. And I actually thought the opposite. I thought that Solana was much more centralized and chosen by Wall Street and was actually going to be the thing that tokenized the world. Still might be, who knows? But Ethereum is definitely doing well. Now, if people are not into crypto, I completely understand. What I would start to do if I was to try to teach someone about these things is to think of it like a technology company. Okay. Currently, let's imagine Ethereum is a software and they sell a product, and that many companies are going to tap into this product to help with their businesses, whether that's a payments business, whether that is, financial solutions, real world assets, all types of things like this. And right now, today, there are very few companies using it, but they immediately see the benefits, the security benefits, the cost saving benefits, the time saving, all of these things. And this company has a buyback program. This company, which we'll just name this company Ethereum, has a Ethereum Co. This company has a dividend. It's got a buyback. I don't know. I like that. I like the treasury companies that are buying a business rather than a store of value. So I feel actually much more comfortable buying an SBET or a BMNR. And I'm not suggesting this for anyone else. And this is the money that I'm using, I'm happy to go to zero. Okay. It's not a large percentage of my portfolio, but I like this. And it makes a lot more sense in my head that this is a growing percentage of the TAM, and that Ethereum could go to, $10,000+ per share. And what will the treasuries that have been acquiring this product be worth whenever it increases over time, and while still paying a buyback? Well, I don't know if that's essentially true. I mean, maybe the more mature companies like to acquire assets, but there's also a lot of businesses that I like that actually remain very asset light. So I think that most companies that you will be buying will be using the technology, but won't be buying it to hold on their balance sheet. Because the same way that gold might have a value, or other things like this, or real estate, but there are companies that don't want to hold any real estate or don't want to hold any gold because they want to be very asset light and not tied down those things. So I think that the people who are not into crypto at all can remain not into crypto. I think that's fine. But I think that we are transitioning over to a world of stablecoins. And the biggest thing that held me back was regulation before. Like, I was always dipping my toes, putting single-digit percentages of my portfolio into crypto. But now with the Genius Act and the Clarity Act coming behind it, I'm really starting to believe that these are software businesses that have massive technological advancements, and governments are pushing it, and regulators are pushing it, and everything, because it leads to them having more transparency, better security. Yeah. Yeah, I don't know if BBAI is going to be the new Palantir. I also don't like a company that has no Q&A. I also noticed that today. That was quite interesting. Who knows? BMNR is bonkers right now. Well, yeah, the treasury companies are just, as long as the stock price doesn't fall dramatically, have a very fast way of accumulating new shares and you know, potentially leveraging up to acquire something that, if it does continue to climb higher, will be a very great effort for their shareholders. And Tom Lee is a very great personality to get those points across. Everything that he says gets listened to by hundreds, millions of people every day. Let's see. Kathy from the block, she bought 250,000 shares of XYZ. Yeah, I mean, she's been buying and selling companies that she's liked in the past. I don't know. Could be cool. Maybe it isn't. Who knows? I'm not anti block anymore. I don't think like anyone should bet against these businesses. But if I wanted a Square seller, I would buy Shift4. It's just an all-around faster growing, better margin business than Shift4. And if I wanted a better Cash App, I would buy, you know, SoFi or Robinhood, or if you want a peer-to-peer payments company or a crypto company, I'm sure you could find that in PayPal or Coinbase or something like this. Like, I'm just, I'm okay. I'll pick more concentrated bets going forward. I think that they could have been. Yeah, I'm done talking about block. SoFi 1 billion a quarter in Q3. I have not ran the Well, I have ran the numbers, but I have not ran the numbers too accurately yet, just because we haven't seen all of the data that we will to judge like amount of new members, what capital markets activity is doing during that quarter. So what percentage of that will be loans? But if I remember correctly, I don't think I had 1 billion a quarter in my thing. I'm going to check it now, but I don't think I did. Maybe I did in Q4, but maybe even not. Maybe I had like something a little bit lower. What's the one point you'd make to those bearish on SoFi? Well, they all have different opinions. I mean, the problem is that I look at the member growth and the average revenue per user, and then the operating leverage that they have, so that the lowering cost to serve those users, and assuming that they can continue that strategy, it's a guarantee. Like, I see this in every single SaaS business, every single one. But if you say SaaS business and you say SoFi, people get disconnected. They go, oh, well, okay, you lost me, because it's a bank. You know, oh, well, it's a consumer software company. Like people are choosing the products at SoFi, and you know, they get quite a low cost to serve, and there's like the spectrum of customers that they can serve. Doesn't matter if one person walks through the door in a day or 1 million, they can serve them all at the exact same time. Banks can't do that. You know, like, one thing that I loved about the Chime call was that they even quoted a large bank executive that just recently said, hey, we don't even want low cost to serve members on our platform because they cost us too much. And Chime was like, hey, that's our bread and butter. Like we'll take them from you because our cost of service is so low. But SoFi could serve those customers successfully as well. So What's one thing? I don't know. To me, it's hey, look at the members. Look at the unaided brand awareness. But to them, they'd say, okay, but look at the net interest margins over the last 2 years. Okay, thank you. Appreciate your time. You missed a triple, not me. If you bought at 4, you missed a 5x. So it's a triple for me. It's a 5x for some of you guys. Yeah, to be fair, they are not a bank. So they're benefiting from saying that because they are not. They made it very apparent during the call many times that they are a technology company. But then those same similar companies that'll say that they're not a bank will get into credit products. They will. And they just will have less advantages in credit because they're not a bank. So, yeah. Tanner, tell us something positive about new so we don't sell during this depressing price action. I think a lot of it's macro driven. I don't want to control your portfolio, so I don't know if selling is the right move for you or anything. I'm not personally selling. And the reason is that I think that members are going to continue to grow. They're going to take higher market share and they're going to expand globally. And those currency risks, the problems with Brazil are going to decrease quarter over quarter as they take faster growth in Colombia and Mexico than they will in Brazil. And that's just going to continue to happen as they expand into the US and they expand into Chile and Peru and Argentina and potentially into African countries and then Middle Eastern countries. Like, there's no end to the potential growth that they could potentially get into. And then even expanding outside of financial services into non-financial services. Look at Block, look at Interco, look at all of those things. Nubank has an extremely young and capable CEO, one of the smartest in the world, and a mission-driven team. It's one of the best engineering leads that you've ever seen in all of fintech. So I'm going to continue to bet on that. It's funny because, like, on a day-to-day basis or a weekly basis, you could see a large drop in a stock, and people can take the stocks that I've held and like throw the thesis in my face. And then over the years, whenever you go, oh, well, I actually saw this company back under 4, and people go, no, you didn't. It's like, dude, go watch my videos. You go tell me in the time frames of when I've been covering this company where you think that I've sold. So I need to see real data, not feelings, on reasons to believe that Nubank is in a bad position right now. And I see that and I don't even mean this comment. I'm not talking about this comment at all. I mean like Wall Street in general. I'm not saying that there's trolls in here. I'm just saying like the broader market constantly is testing your patience on stocks. There will always be people who say that the stocks that you're holding are bad. And even, to some degree, what I do to other people's positions is I say that they're overvalued, that they're not growing, their CEOs are incapable of growing this business. And I could be right, but oftentimes I'm wrong. And the people who have put in more due diligence are usually have a better sense of judging where the company is going to go. But I would also say you have to have some track record of success for me to believe you. Like, let's take Admit, for example. I still think, I look at Palantir's valuation, I go, oh my gosh, like I'm not buying that right now. But it's worked out for them well. And the people who are buying it, I do not think are bad investors at all. So I don't see it, but I don't have to see it. I don't know. You got to have thick skin in investing. That's for sure. Oh my gosh. Yeah. It's every day. It's every day that someone tests a position that I hold. And, there are some times where they're right and I'm wrong. And I go, oh, you know what? I should have. But then that also starts a thing where you start to question yourself. I've made mistakes before. Is this a mistake again? But you better do more work than you did the last time. What did you miss those times that you had underwritten a business or thought that the TAM was bigger than it was? There is Tech Bros Weekly tonight. There is. I'm debating on selling new and putting money on SoFi. So you can do that. You'd be placing your money in US markets and away from Brazilian markets, which is a new market. Like that is very real. Okay. And there could be big problems with Brazil in the short term. You're also buying a company that has not shown many weaknesses. Or sorry, you're selling a company that has not shown many weaknesses, that's growing during hard times, and that has proven that the market is willing to buy it up and essentially 4x the stock price in short periods of time whenever things do get better. So if something's not working for you, make sure that it's the company that's not working and not the stock. Because if you're selling the stock to buy a stock if you're selling your red positions to buy green positions, that doesn't always work out too favorably as well. Not to say that you're going to lose money in SoFi, but you may not make as much as you would keeping your position in new. But I also am not the one, I'm not crystal balling it. I'm just saying consider both options. Been in hood since 7 USD. It's good. That's freaking good. You're about to be at a 20x here soon if we get to 140 or whatever. And I think it's coming, which is hilarious. It's just kept climbing. it just won't stop. This morning or at intraday today, we're at 117.35. The highest we hit was 117.47. It's insane. Very, very happy hood shareholder, by the way. I own SoFi new and D-Local, hoping 2 of the 3 will be home runs. I like that mindset. I actually love that. I'm going to miss something on one of these, but as long as I got the 2, I'm good. Tanner, what do you think about Anon? I don't really. I've thought about buying shoes recently, but yeah, not the company, unfortunately. I should look into it though. Nothing bad to say about the business. I just don't have the time to look at everything, and I'm really into digital business software, stuff like that. Or in the case of Shark Ninja, it's just like has affected me so much, and I've just noticed that alpha. And so I ended up acquiring shares. But and we're at 114 now. Which is all right. We're doing okay. Had quite the insane deal around Liberation Day because people were worried about Chinese tariffs. So it actually brought it down to like $66 a share, or at $60.50 in the last 52 weeks, which is insane. But then people realized, and the CEO started coming out a lot saying that they're moving their production away from away from China and into more other Asian countries, Malaysia, Cambodia, stuff like that. Do you follow Lemonade? Not closely enough. I really should, though. Will I listen to any earnings tomorrow? Yes. CoreWeave for sure. We'll probably go live for CoreWeave because I'm super interested to hear what they have to say about the GPU market and how much capacity they're standing up right now. But I'll probably also listen to the Circle call. It just might not be public. I'm excited to hear how that goes. No offense to Jeremy. I heard him speak live. Yeah, it was a pretty boring speech, but interesting company for sure. So I'm interested to hear how the earnings call goes, I guess. Oh, the community. Yeah, let's look at the community fund really quickly. So for those that are new, we have a lot of viewers today. We have a community fund that is funded only through donations and completely designed by you guys. And today was flat on the day. SBET turned around really quickly, but honestly, at one point today, this was actually making the portfolio head quite higher. Now, in total, we are still down on SBET around 40%, but I'm actually a believer in it. I think that we will be positive on this position and exit a year from whenever we acquired those shares and be out of it successfully. I think that for probably the majority of the positions that we hold, and then the smaller names, I don't know. Who knows? But yeah, pretty good performance over the last few days as even SBET being down 6%, I'm not too worried about, and SoFi and Abcelera and all these ones continue to improve. You're not in BMNR. I think we might have a little bit of BMNR. BMNR. Yeah, we do have BMNR. It's up 14%. It's just our 12th biggest position. Yeah, like if you see here, where did it go? Here. But I think even, yeah, isn't that crazy? SBET's down 40, BMNR is up 40. Oh my God. What a stab to the heart. What about that Lemonade? Lemonade up 27.4%. If you donated it, Alec, I appreciate you. It's in the report. It's just also hard to remember. Also, I hate all the name changes. This is crazy. I hate all the numbers in it. It's actually driving me nuts. Do you think Palantir is still a buy? I think that's about time that we wrap. Ladies and gentlemen, really do appreciate your time. Thank you all so much for coming out, watching, supporting the channel. It's been great. But until next time, bye for now.